Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. An exciting episode for you today. Anthony Power and I are pleased to welcome the CEO of Luxor Technology, Nick Hansen, to the podcast for the very first time. We're specifically going to be talking about their newly released or launched energy platform. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you thought of today's discussion and if you've used any of the Luxor products before. With that being said, let's get into today's podcast. All right, guys, away we go. A great podcast in store for you today. CEO of Luxor Technology, Nick Hansen, joining us on the show. We've had a number of people from your team over the last few months on the podcast. Nick, we're excited to have the head honcho himself. We've got a great list of questions. Really looking forward to today's discussion.
Awesome. Yeah. Thanks for having me on. It's been a minute. I know that you guys are, talking to a lot of the Luxor folks, and glad to come on and represent the company.
Most definitely. So the standard kind of introductory question we've been asking, can you tell us about your orange pill moment, when you got involved with Bitcoin, and then ultimately how you linked up with Luxor?
Yeah. So I've always been interested in crypto. I shouldn't say always. I mean, around 2013, I got really interested in this idea of like internet money. I learned, some of my friends, I was a software engineer before Luxor. So I worked at Salesforce as a software engineer there. And of course, computer money, internet money was kind of a topic, right? It was still at that time, still very nascent. We weren't mining with ASICs like we do today. It was folks were mining with GPUs. It had just transitioned from CPU mining to like GPU mining. And I was like, this is really interesting. You can like use computers to make money. And really understand all of the details, but was like, this could be really big. And was really interested in it just from mostly a nerd's perspective. Like, I'm going to run this software. I'm going to see if I can generate some bitcoins and just kind of get involved. And so that's kind of what my early entry into Bitcoin and cryptocurrency in general was through just mining, in my basement. So I went out and started buying used GPUs on eBay, and started building some miners out of milk crates. So you would take 4 or 5 GPUs, put them in a milk crate. It's actually a really good form factor for GPU mining. Fill up my basement. I'd spent maybe $8,000 or $10,000 on GPUs. Had bought somewhere around 15 of them in total. And my power bill was like $400 or $500 a month, and my energy company was like, "What is going on in there?" But yeah, so I was really interested in that, and so right around that time, that 2012, 2013 period is when ASICs kind of started to be developed. There was a company called Butterfly Labs, which is somewhat infamous now because they took a bunch of customer deposits and then ended up just mining the machines themselves. Probably made a ton of money but I'm not really sure where they landed. But I ordered a couple jalapenos, which were these little 200-watt devices. They were about the shape of a cube, maybe 4x4. They showed up super late. Like when I first bought them, they were printing something like $100 a day for a device that was only maybe, I think it was like $400 or $500. Of course, by the time they showed up, they made pennies on the dollar. But yeah, that was kind of my early transition in mining, and so saw all of these coins that were starting to come out that were purporting themselves to be ASIC resistant. That was kind of the trend in the early teens, was making coins that couldn't be built, that ASICs couldn't be built for. So they tried to do things that were memory hard, or required specific algorithms that weren't very friendly to ASICs. But then at that time, Bitcoin had gone very much into the ASIC land. So I started mining Litecoin and Feathercoin. This was all pre-Ethereum, of course. Feathercoin and Terracoin and all these different coins that you could Doge that you could mine with GPUs, and was like, this is really cool. And then actually one of my first uses of cryptocurrency was actually online poker. So you could use, there was a site called Seals with Clubs. You could deposit Bitcoin, get credited in Bitcoin, and then you would be betting with Bitcoin on Seals with Clubs. And at the time, I remember sitting down with a table that had people that had 5 to 10 Bitcoin. Looking back on that, it's kind of ridiculous to think about, but there's a bunch of degens that had a few Bitcoin, and they were playing poker with it online. So I try not to think about how many millions of dollars of Bitcoin I lost playing online poker at the time. Maybe a few $1,000, but now, of course, Bitcoin has we're sitting at about 117,000 today. So yeah. So that's anyway that's like my personal interest, and then I started to kind of realize how powerful this technology was. Like, I'm able to send money to anybody without an intermediary and have it be fully trusted, and they don't need to know me or trust me. I don't need to know them or trust them. I can send money pretty much anywhere, and this is incredibly powerful. And that was really kind of my more I guess fundamental and philosophical mind shift was around this idea that there's this uncensorable money out there that you can use, whether it was Litecoin or Bitcoin, whatever at the time. I was like, this is really, really powerful. So it stayed very interested, but of course got washed out during that big bear cycle. That bear cycle was really, really deep. And kind of got washed out and was still interested, but of course had no money. Quite young, early in the career, had no money to really capitalize on any of this stuff. So continued my professional software engineering career, and developed skills, and got to a point where, the 2017 cycle was starting to heat up again. And I was like, okay, I've really got to do something here. So I started working on a coin called Sia coin, which is like distributed file storage. Actually, the technology is very, very interesting. Of course, the coin never really did anything. But the technology is really interesting. The idea is you could shard up files, share them around, and then people would request proofs, and they would get paid rent for this. All decentralized on blockchain. They were actually using atomic swaps and something almost like a lightning channel for this. It was really cool technology, but ultimately didn't end up really working out. But got interested and was actually doing software engineering on blockchain technology as a hobby, and was like, this is really interesting and cool. I was pushing some code to GitHub, and then somebody pinged me, who's now my co-founder, Eddie Wang. He pinged me and said, hey, this is really cool. We should work on this together, like just as a hobby again. He was still in college. And so we started working on it together. And then at some point they were like, hey, we actually have a problem in Siacoin. 98% of our hash rate is on one pool, and we'll pay you to go and build another pool, and we'll support you and all that stuff. And so that's what we went out to do. And so we started building our very first mining pool for Siacoin. And that was when we were like, oh, we should probably start a company. So that's when Luxor was started. The name. Some people ask about why we called it Luxor. So Sia is an Egyptian god. The Siacoin team forked off another company called Obelisk, which is like the name of the monuments in Egypt. And so we were thinking, like, what could we do? What could we do? There's not a lot of really good Egyptian names that are easy for English speakers to know and pronounce. There's like Ankh, which is Ankh, or Pharaoh. I challenge anybody to spell Pharaoh correctly the first time. My wife said, you could call it Luxor. I was like, well, kind of get confused with the casino. I'm not so sure. And then after a while of thinking about it, like, actually Luxor makes a ton of sense. So we just called it Luxor. So we were Luxor mining pool, mining Siacoin. And that's the genesis, 2017, of how Luxor actually got started. Then over the next couple of years, they got introduced to Ethan and Guzman. Eddie did in college still. And they were super interested in Bitcoin and cryptocurrency. And so they joined. Mostly, again, we weren't really making any money, but we were, just trying to build this business and build up a community of users for our products. And that was mostly the course of 2017 and even 2018. But then towards the end of 2018, we started to get like kind of an inflection point where it looked like, well, we actually make enough money now for somebody to work on this full time. And so we started putting those plans in place at the end of 2018. And then I put in my notice and then started my first full-time day as the CEO of Luxor on July 1st of 2019. And our first order of business was to build a Bitcoin mining pool. And so we went and built the Bitcoin mining pool in 2019, and have pretty much been off to the races ever since. So, sorry, it was maybe a little long, but yeah, that's the story of who I am, how Luxor came to be, why it's called Luxor, and how we got to where we are today.
And that's the Luxor pool that we see at the moment now as one of the main pools out there. And again,
Correct.
from that pool, can you sort of like what type of customers were you trying to attract to your pool? Bear in mind, I would imagine at that point in time there was some obviously competition with other pools out there at the moment.
Yeah, so at that time, all we had was a Bitcoin pool and a bunch of altcoin pools. We had like 12 altcoin pools at one point. We started to kind of see the tea leaves and realize like proof of work mining is really going to consolidate to just Bitcoin. And that time was also really where my at least financial maximalism came from. So I'm definitely a Bitcoin financial maxi. I'm not opposed to like other chains and them trying things out and doing interesting things, but majority of my financial wealth is held in Bitcoin. And so the types of customers that we were looking for during that time were mostly like retail. We were going out and trying to find like what we call now pleb miners. They were just called retail miners at the time, but we just were looking for retail miners because retail miners generally went out and bought 3 or 4 S9s. They bought a few L7s for script mining. They bought some Ethereum miners. We had an Ethereum pool. They bought all these different miners. And so we kind of just wanted to cater to like the guy that went out and bought, maybe 20, 25 of a various assortment of miners, and we could serve all of those, all of that hash rate. But we really started to really focus on Bitcoin through 2019, 2020, and then 2021, just really realizing like there's really the only place that's any scale. If you're going to start building institutional miners, it's going to be for Bitcoin. There won't be institutional Litecoin miners or Zcash miners or whatever. So really started to focus on that. We started trimming our altcoin pools just as they kind of reached the emission curve or the coin just started to die off. We really just kind of started really honing in on Bitcoin and Bitcoin only. And so we started thinking, well, Bitcoin mining pools are not really that great of a business. There's not a ton of margin there. Fees are going to zero. Foundry launched and they were at 0% for a long time, and we had to compete with that. And so we started to realize we got to build an ecosystem here. It can't be just the Bitcoin mining pool. The Bitcoin mining pool can be the center of the ecosystem, but we need to start building other products that miners find valuable and useful. So some of the first products that we started to launch, we call them the big four. So we've got the Bitcoin mining pool, that's one. We started getting into mining machine brokerage, so buying and selling mining machines. So that's actually the most kind of traditional business that we do. You're buying a physical good, getting an invoice, we're shipping it, you receive it. It's all very traditional business. You can apply all the same business models that you would for selling T-shirts or any of that sort of thing. There's import, export, duties, taxes, all the things that you traditionally do. So brokerage is number two. Number three was LuxOS. So that's the software that goes on the mining machine. We call it third-party firmware. Competitors would be like Benish or Brains. We felt like there was definitely room for innovation in the third-party firmware space, and LuxOS has definitely been in a pretty insane growth story for Luxor. There's about a gigawatt of miners using LuxOS today across a bunch of different countries and continents, and that has been an incredible growth story. The market really likes LuxOS, and we've done a really good job of building a product that the market was really looking for. And then, so that's number three, LuxOS. And then number four is our Hashrate-based derivative products. So we started with a synthetic product called a non-deliverable forward. More or less, you're taking a bet on what the future price of Hashrate will be, the future hash price will be, and then settling it in cash. We also have a listed futures product on Bitnomial. So you can actually go and trade hash price futures through a centralized exchange like Bitnomial. And then our most successful product, the thing that really hit the nail on the head for our customers and for miners around the world, is what we call our deliverable forward. So that's actually a physically delivered product. The reason we started building this is commodities have been around for centuries. Commodity markets have been around for centuries, and all of these same products and financial principles can be applied to our industry. We're doing something new with money, but the principles are still the same. So the same way like corn and oil producers can sell forward their corn production or oil production to reduce their exposure to the market and then make themselves more financeable, we started to think this is probably going to happen for Bitcoin and Bitcoin mining. So we started building these products, and the deliverable forward is really the culmination of all of that effort. So a deliverable forward is actually a selling forward future production of hash rate. So say you've got 1 exahash of hash rate, you want to sell that forward for 6 months. You take a slight discount on the value of that hash rate, and then the buyer then is getting hash rate at a discount, but you're getting some capital up front. You're reducing your exposure to the market. You're reducing operational uncertainty. Or I guess you're not reducing operational uncertainty, but you're reducing your financial uncertainty and thus the operation of your business. And then you also get capital up front. A trade that we've seen a lot of times over and over again is somebody that has like an old fleet that they're trying to refresh, say a bunch of S19J Pros. They'll sell forward the hash rate from those J Pros, use that capital to go out and buy the refresh machines, S21s, S21 Pros, et cetera. And then as those machines are being delivered, they're able to cycle them in and then continue to service the contract and then sell the J Pros. So that's been a trade that we've seen executed quite a few times. Is basically selling forward the hash rate to refresh the fleet. We've also seen folks just use it as a pure hedge. They're not really trying to gain any have any financial gain. They just want to lock in some certainty. And they're willing to give up maybe some upside to the buyer of that contract because they now have that locked in certainty. And so those are the 4 big products that we have today: derivatives, firmware, mining pool, and brokerage. And then I guess we'll start talking about number 5 here in just a second. So anyway, that's a little bit about Luxor and kind of where we're sitting in the mining ecosystem today.
Yeah, that's great. And to hear the products, the customer base just continuing to grow, the LuxOS I know is very highly regarded in the industry. Now, you just alluded to the 5th category here. We wanted to start talking about the energy vertical or component of your company. I know this has become a hot topic in the space. Obviously, the HPC AI mega trend right now, megawatts are hard to come by. You guys getting involved in the energy sector, energy space itself, what can we expect there?
Yes. So we're expanding our 4 products to 5, and the 5th product is going to be called Luxor Energy. It's made up of 3 main components. They can all be used somewhat individually, but as a package, they're certainly industry leading. So number 1, we are a rep, a retail energy provider in Texas, meaning we can now go out and acquire wholesale power and supply it to our customers. We already have about 10 megawatts of load flowing through the Luxor Energy platform today. And the reason this is really interesting, we have the best adder. We understand miners better than anybody else. And then we have it all in the Luxor platform. So, the same platform that you go to see your mining pool, you go to see your brokerage deals, you go to see all of that, you will have an energy tab, and you'll be able to go in and see your real-time load. You'll be able to go see what your estimated power bill will be, all of that. So that's like the flagship there is our rep business. So that's taken a long time to get. It takes a lot of effort and a lot of paperwork, a lot of capital to become a rep in Texas. But we've gone through that work and are now serving load to customers. The interesting part about being a rep is that we're a crypto native company. And so we're happy to take Bitcoin as collateral. So anybody that uses ERCOT knows that you have to put, sometimes up to 60 days, a lot of times 30 days of collateral down for your power consumption. And so a lot of miners, that's a big hurdle for them, going out and sourcing 60 days of power and then just depositing it into an account that is effectively locked. That's a big burden, and they want to be exposed to Bitcoin. So we've recently been able to we can now take Bitcoin as collateral for these energy contracts, and even more exciting is we actually have the ability to auto pay. So your payment will now net out of your mining rewards if you want. Some miners want to just lever up and take all of it and then use USD to pay their reward or pay their power bill. But we have the option to auto pay. So that's number one, Luxor Rep, which is industry leading, and we're very excited about that. We also we have the best adder, we have the best prices, all of that stuff. So number one. Number two is called Luxor Dispatch Signal LDS. That is a product that enrolls you in and classifies you as eligible for demand response, ancillary services. We also do 4CP avoidance, and so all of that is driven from the Luxor platform. So you integrate it with your mine management platform, whether that's your in-house mine management or a third party. They just grab the signal from the API and start ingesting it, and then that will, take advantage. You'll realize your demand response uplift if there is any. Your ancillary service takes care of all your ancillary service calls, and then we also advise on which programs your fleet is best optimized to service. So there's sub-programs within ancillary services that we will enroll your site in. So that's number two. So we've got Luxor Rep, Luxor Dispatch Signal, and then probably the most interesting and most novel is going to be Intelligent Miner. We call it iMiner, Intelligent Miner. This is actually a kind of an extension of LSE, but it is, LDS, Luxor Dispatch Signal. But more or less, it's taking your miner from being a binary switch. When power prices are high, you turn it off. When power prices are low, you turn it on. Instead of being just a binary switch, with the LuxOS platform, LSE, and the Luxor Rep power price signals, we're able to drive your facility with intelligence. Instead of turning your machines off, they'll slowly ramp down, or they'll ramp to a place where they're still profitable. Or if power prices are low, they'll ramp up, overclock them by some percentage. So instead of being binary, you're now actually really accurately determining what the most profitable point for your miners to operate at is, and producing that signal and driving the facility and driving the machines to maximize that profitability. We've seen pretty incredible gains from running iMiner on our test fleets, meaning we have a set of machines that are doing binary mining, we have a set of machines that are doing intelligent mining, and the uplift there is pretty significant, to the tune of maybe 10% even. So that combination of three verticals within Luxor Energy are really the package. And you're most likely going to be hearing this podcast around the time of our official announcement on October 9th. And as of that day, October 9th, we are ready to onboard new customers. So if you're in Texas, you have a relationship with a rep today, reach out to us, reach out to our energy team, and we can start talking about getting Luxor Energy integrated into your site today.
In terms of obviously Texas and ERCOT, you mentioned 4CP. Will sort of are you having any sort of like hedged contracts for power, or are you literally going to be using market rate like a number of miners are doing at the moment? I mean, there are the likes of Riot who have a PPA agreement for their Rockdale facility, about 345 megawatts, and when they switch off power during that period, they're able to sell power back to the grid and in return get some energy credits. Is that sort of something that customers can benefit from, or is it more of a case of the switching off power when the price is high, so they're not incurring them additional margins?
Yeah. So they don't call you Mr. Power for nothing. You're definitely thinking far ahead into what the life cycle of Luxor Energy will be. Yes. So the goal, so that's V1. V1 will be the three things that I sort of described previously. But going forward, there will be a tight integration with our derivatives team, who will actually be making it available to do what's called day-ahead market pricing. So participating in day-ahead markets. So based on current economic, the current power prices and what we consider like the environmental conditions of your site, there's a chance that the day-ahead market could be cheaper, and you could be buying day-ahead market and hedging today with tomorrow's prices. So that's something that you can engage in right now today. We do think that there will be the ability to input like a PPA. Say you do have a PPA. Let's just use Riot as an example. Riot does all their own power management and everything like that. They're obviously kind of a class of their own, but let's say you have a PPA similar to Riot. We have the ability to inject your contract into the Luxor Energy platform and more or less trade around it. Whether prices are above your PPA and you want to sell back to the grid, or you're below your PPA and you're maximizing your value there, we will have the ability to trade around your PPA through iMiner. So iMiner will be the one actually making those decisions and deciding when you should be on and off.
Yeah, this is. I mean, this is awesome. This is new. This is great to hear. And obviously Texas, where we have the biggest concentration of Bitcoin mining in the US, is a great state to start from.
Yes,
but there are other states in America, and there are other countries north of America where there's a significant amount of Bitcoin mining. Is a sort of like the end game once you've managed to get a market executed well in Texas to maybe expand that into other regions?
Yeah, absolutely. So we've always kind of taken the land and expand approach to any new product launch. So that means find an area that you think you either know the customers well, know the market well, you have some sort of right to win. Start there, and then you can go after the more difficult areas, maybe the areas that you don't have a right to win today. So we're going to land in ERCOT, expand to whatever size we think is, sufficient, and then we'll start going after new ISOs. So some of the ISOs that we've talked about when talked to are SPP, PJM, MISO, NISO, and then we would love to start working internationally, maybe in Canada as well. But right now the goal is really ERCOT, and I imagine that'll be that way for at least the next quarter or two. But then definitely keep an eye out for SPP and PJM to be right around the corner.
Now, just as importantly, we've obviously seen the hash rate go above that 1,000 exahash, even on the 7-day moving average, and we've been using the Luxor charts in recent podcasts to highlight that. But the message we're hearing from the Bitcoin miners in North America is they're starting to pivot their power towards HPC. What are the opportunities to work with those miners who are pivoting to HPC? Is your product going to be suitable for that type of strategy, or is this more solely aligned to Bitcoin mining?
So right now, Luxor Energy is very tightly aligned with Bitcoin mining. There's no reason like our rep business could service any load. But you don't really get the Luxor dispatch signal or benefits of iMiner, because it's if you're running traditional load, those signals mean nothing. Whether it's an HPC facility or you're building cars or whatever the end load consumer happens to be, those signals don't really mean anything. But we can still serve them power. So definitely there is a place for Luxor Rep to start serving loads that are not mining, but really the benefit comes specifically to miners. That's who we are. It's how we build our customer base today, is through mining. And so we'll probably stay very mining focused for now, but there is certainly discussion around how could you apply these same concepts to HPC, AI, that sort of thing.
And my final point on this, before I hand back to Bryce, is because that hash rate is growing still, and we're not seeing it from the traditional public miners in North America, with the exception maybe Bitdeer and Hive, who have grown their hash rate in the last few months. Are you starting to look at targeting areas where the hash rate is growing in countries outside of North America?
Well, I'd love to, but getting a rep service there, or just even being able to serve retail load in any of those countries, is probably a pretty big hurdle. So we'll definitely explore it. Hash rate right now is growing as a result of a couple things. One, we're now out of 4CP season, so there's going to no longer be curtailments. We saw, July was a heavy CP month. September, actually the CP print was early in the month, so miners were off early and then pretty much mined through the rest of September. But now there's no more of that pressure. So, there's still a lot of private miners in Texas. The majority obviously are public miners, but there's a lot of private miners as well. Big miners like Coremint, have a lot of hash rate, and they play the power markets pretty well, maybe better than anybody. And there is no longer that 4CP pressure. So that's going to drive hash rate up just from a utilization perspective. We're also seeing a ton of miners that are switching hands now from J Pros to 21s and 21 Pros, et cetera. So the same amount of power consumption is now generating, call it around 2 times to 3 times as much hash rate because of that increased efficiency. And then, as you mentioned, all those J Pros need to go somewhere, so they end up going to Ethiopia, Latin America. And I think it's been hard to really nail down, but it seems like China might be coming online as well. So there might be more mining in China than we really expect, and so that's kind of where I think the most of the hash rate growth is coming from right now.
Yeah, that's great context. And we have a hunch maybe China's getting involved as well. Now, this is kind of a fitting end to the discussion today. And as we alluded to at the start of the conversation, we've really had a number of members from the Luxor team on talking about all these various different facets. So my final question for you, Nick, now that you've got the Luxor Rep, the Luxor dispatch signal, the intelligent miner, you've already got derivatives, the pool, it really feels like kind of the one-stop shop for any Bitcoin miner that needs a plethora of services. So I wanted to kind of hand you the mic there and talk about really what this opportunity represents for people in the Bitcoin mining space that just want to be able to focus on mining and kind of have the support of a company like Luxor behind them.
Yeah, it's a great question, and that's honestly the way we built Luxor from the beginning is we understand the challenges of miners because we've been in mining for so long. The early days it was more about operational efficiency, meaning in the early days it was more about keeping machines online because there weren't all these great fleet management softwares at the time. Most people were kind of home rolling their own solutions, whether that was through various scripts or trying to write their own applications to monitor. That was kind of the early days, was getting operational efficiency, just making sure the machine stayed on. But now it's a lot more than just that. You need to be actually maximizing the profitability of every machine. Kind of one of our ethos has been how can we take a data center and take it from being just a black box of hash rate production to breaking it down into each individual chip for each miner. So that takes a lot of different layers. So LuxOS is kind of the start of that. So that's the interface directly to each chip, and it's optimizing every chip that's on every machine. And then you have the iMiner, which is telling the fleet management software how should we consider each machine. Now that each machine has all of its chips fully optimized for a particular setting, how do we optimize the machine as a whole? So we're really kind of trying to break down and modularize the mining operation. So you're looking at every facility as a bag of chips that can all be operated differently, as opposed to like one big site that's just taking power in and pushing hash rate out. And so, we want to be the place where you can go and get access to that level of granularity, whether that's through LuxOS, whether it's through iMiner, or all the other products that we have. And then even zooming out a little bit, we thought about like, how do miners approach like the financialization of this? It's more or less a commodity producing asset. How do we approach that? So that's kind of where derivatives came from. And so, we want to give access to miners, we want to give miners access to this type of product and view it through a very traditional commodity producer lens. So that's where our derivatives products came from. And then also, we actually kind of look at, Bitcoin miners sort of as a commodity. They trade kind of like commodities. They all have a relatively the same price at different intervals. And so you really have to provide value all the way across. And so from the way we see it, we just try to drive value for our customers at every stop, and that's sort of that's how we've gotten to where we are today, is just by really thinking about the customer, the challenges they face at every step. So, let's a little more tangibly. Let's say you got $1 million and you want to go deploy it as effectively as you can and make the most money that you can by deploying that $1 million into Bitcoin miners. Well, it starts by buying miners. Once you've got the miners, how do you optimize them? Once you've optimized them, how do you pay your energy? All of those different phases of the mining operation, from soup to nuts, we have been injecting what we consider significant value along the way. And so that's the way I like to think about Luxor and why customers should engage with us and engage with our products.
It's great to hear you talking about all these various pillars moving forward, and you've given us an insight into where things are going in terms of that energy pillar moving forward in Texas, and that seems to be a great opportunity down there. But in terms of Luxor's long-term strategy, do you see the opportunity in the future to maybe become a public company? I'm thinking in terms of any company that wants to grow. The bottleneck to grow is raising capital, and it's probably challenging as a non-public company to raise capital in the same way that we've seen some of these public miners raise capital literally just in the last week.
Yeah, absolutely. So the one thing about building a software business is we're very CapEx light. So you look at Marathon, you look at CleanSpark, Iris. They need to go acquire billions of dollars to go make the capital expenditures they need to build out the sites that they have. There's a lot of dollars spent, moving dirt around, pouring concrete, buying containers, hooking up transformers. All of that requires capital to get off the ground and get to the final output, which is Bitcoin miners running and producing sats. Luxor doesn't need that. We need smart people that are able to sit and produce high quality software products that are highly performant, highly reliable, all of those sorts of things. So we're not very much capital constrained in the traditional sense. Really, our major growth constraints now are not capital. It's more time and talent. So we need time and talent. So we can buy time by acquiring talent, and so that's really what we've been doing. We've been hiring a lot. So I guess if anybody's listening to this that knows Golang, that knows TypeScript, that knows Python, hopefully you can reach out to Luxor, because we are recruiting pretty heavily for those types of positions. And yeah, that's really kind of where we're constrained as opposed to like needing more capital. As it pertains to public markets, yeah, public markets very attractive, of course. From our conversations right now, we've mostly heard that most investors are looking at DATs. They're mostly looking at digital asset treasury companies right now, whether that's a Bitcoin company or otherwise. They're mostly looking at DATs. And so we have been somewhat on the sidelines waiting to see where that all shakes out, because pretty much anytime you talk to an investor right now, they're looking for DATs. Investors, we've talked to banks and things like that about, it doesn't make sense to go public at this time. And the answer seems to be no, because they are, investor mindshare is just really held up by digital asset treasury companies. There are, as we've seen, probably 200 or more of them in various shapes and forms. And so we're really kind of just seeing where that shakes out before we make a decision on what Luxor's public path looks like. But I would expect, Luxor will, assuming everything goes well and we continue to execute and do all the things that we need to do, I would expect, most likely Luxor will end up being public at some point. It seems like the most natural path for us to go because of the, we're kind of to a size now where it's somewhat awkward for one of the big miners to acquire us, and it also introduces like some competitive nuance. Tangibly, Riot acquires us, Marathon doesn't want to use our products anymore because they're giving money to their competitor. So we look at it that way and kind of think most likely the path to liquidity for any of our investors, shareholders, early employees, et cetera, is most likely to be going to public markets and go raise capital that way if needed. So I would expect Luxor to be a public company eventually. I just don't know what that path to get there is right now.
That's fine. Thank you.
That's great, Nick. Yeah, we look forward to following along. It's exciting to see these new product services come to fruition and hit the market. You guys, if you want more information, make sure you jump over to the Luxor website. All the information's linked below. If you have any additional questions for Nick and the team, feel free to leave them in the comments section. Hit the like button. Feel free to subscribe. Nick, we greatly appreciate the time. We'll hand you the mic to sign off, but this has been super informative.
Awesome. Yeah. Thank you guys very much. Appreciate it. And hoping to see this on October 9th. And yeah, if you want to see the website, it's luxor.tech. Follow us on Twitter at Luxor. I'm at #Bender, at Hashrate Index. Yeah, we've got it all. So come check us out, and appreciate you guys taking the time to listen through here. And I try not to be so shilly, but we just have a lot to shill right now, guys.
I was going to say, it's the one-stop shop. You guys take a look if you're not familiar with what Luxor offers. There's a lot under the hood. We obviously highlight the hash rate index, but there's so much more to this company. Nick, great seeing you again. We'll talk to you soon.